Hey everyone, welcome back to Friday Crypto. My name is Chase. Today's video is a Thursday update. It's been since Monday. We had an update then. We're doing 2 updates a week at least. Monday and Thursday, you can count on it. So this is a Thursday update. We're going to look at Bitcoin. In this video, we're going to be focusing on the weekly chart and more specifically moving averages to see if we could potentially tell when a bottom could be in. We're going to look at history and see what exactly crossing moving averages has told us previously. So if you like the video today, give us a thumbs up. If you want more help, navigating the markets for, pretty much daily updates, that's check out Patreon, link below. You can also follow us on Twitter, and we also have a free Telegram group below. So check all this out and get more info. So looking at Bitcoin on the weekly chart, what do we have? Well, we're going to look at the weekly, like I said, and we're also going to go way back in history on the BLX. So Bitcoin BLX, see, as you can see, Bitcoin only goes back to 2015 on this chart. So if you look at the BLX, we can get a little bit more data, and these moving averages go back. But so what do I want to start off with? Look at what we have here. So these moving averages are the 8 EMA. The 8-week EMA is in the red here. The 100-week is in the blue. So these are going to be important looking back in history. Then also, we want to pay attention to the 21-week EMA. So right now, you could see the space in the gap. That could potentially be crossing the 21 over the 100. You'll see historically is quite significant. Now, that could potentially happen sometime in the next, 3 to 4 weeks maybe? You could potentially see that. And now that's also going to depend on what price does. I get that. But if we were to hang out, which we obviously won't, if we were to hang out at a constant 30K, it would probably take about another month or so. So give or take, if we go down in price, obviously that'll happen a little bit quicker. If we go up in price, obviously that'll happen a little bit slower, or may not happen at all, right? If we get a super rally, which I don't know if that's likely or not, use your best judgment there. If we get a massive 3 or 4 greens in a row here for the next several weeks, then we could potentially avoid that cross, and we'll also look as that ever happened. So let's start it off with. You could see right now, as of this weekly close, these crossed. The 8 crossed the 100-week EMA. So let's go look and see when the last time that happened was. If you guessed pandemic, that was probably good guess. So we crossed here. Was the low already in? Yes, the low was already in that time. But this is a black swan event, and if you watch any of my other videos, I really don't like to look at a whole lot of data for this because black swan events are not really going to be reliable on using data points from going forward. So history doesn't always repeat, but it does often rhyme. So if we had another black swan event, sure, maybe we can go off of something like this. But let's go back and look at the 2018 bear market. Right, we crossed our 8 over our 100 right here. And was the low in? Well, not really, but we were very close, right? Within a month of bottoming right here, right? So could we go lower? Of course, right? No one knows if we're going lower or higher in the next, 2 hours, let alone, 2 weeks or 2 months or 2 years, right? Trying to forecast out anything beyond a couple of days is just, pretty much silly and unusable. So that's, maybe that's just my opinion, but I feel like you could probably think back to a lot of predictions being made over the past year or so, and maybe not a lot of those coming to fruition. So this is not, we're going to look at this based on the charts and not based on what he said, she said, the Lucky Charms guy said, just the data and the charts. So step 1 right here, the red crossing the 8 over the 100 week, right? We're on the weekly. The low on this data point alone was very close to being in. So when that crossed, we're at 34.75. How much lower did we go? About 7 to 8%. Between that week's low, and the actual bottom before moving to the upside. Now, I want you also look at the 21 week. When that crosses the 100 week, guess what? That is the actual bottom. Okay, so the bottom is in when the 21 crossed the 100. Remember that. Okay, so now you might say, well, we don't have any more data. Well, I'm glad you asked. Let's go look at the BLX. And then, surprisingly, we get more data, right? So now, don't pay attention to the price because the price isn't updated. So this is not the actual Bitcoin price right now, 28,000, all right? So don't freak out, but let's go back and look at more history here. And what do we got? Well, let's look at the 2014 bear market, right? The red EMA 8, right, crossing right here is the low end. No, but within a couple weeks, it's in, right? There's the low. So within a couple weeks after the 8 crosses the 100 week, the low is in. And guess what? The 21, remember we just talked about that? The 21 crosses the 100 week. Is the low in? Yeah, it happens right then, right? The low, that's 2 data points. Bitcoin's bear market. When the 21 week crosses the 100 week, the low is in. So unfortunately, we don't have a whole lot more data, but we do have one little more. Maybe you could use your imagination if there was a 100 week, right? We didn't really get it here, but you could see that when, the 8 crosses the 50, you really got some more lows going. Don't want to confuse you too much. Maybe that's a different video, but as you can see, we only have 2 data points, but going back to 2014, the 2 times that has happened, when the red 8 crosses the 100 week, so when the 8 week crosses the 100, the low is really close to being in, right? Within a month. When the 21 crosses the 100, the low is in. So let's fast forward back to today. And the 8 has just crossed the 100 week last week, the beginning of this week, within the past week. Is the low in? We don't know. But, the past 2 times, the low is within the next 4 weeks. So 3 weeks after this week, right? The 21, right? This will be important because the previous 2 times, the low is in once the 21 has crossed the 100 week. Just pointing out those facts. Obviously, we only have 2 data points on that. So, take it how you want. If we had 10 data points, right? If we had 10 times where, this has happened, and then it'd be more reliable, right? But only 2 times, right? We're potentially going to have a 3rd time here. So in the next 3 to 4 weeks, we should have a lot more data here going. Now, you might wonder what this line is. This is the 200-week SMA. And historically, that is the Bitcoin bear market bottom on, now we have 3 data points on that one, right? Not held support even in the pandemic, held support in the 2018, held support in 2015, held support in 2014, right? There's 1, 2, 3 big touch points right here before, starting our next move. There's a couple touch points back in here on weekly scales, right? The weekly is much more bigly than the daily or the hourly or whatever. Although all charts have, some kind of meaning, you can, extrapolate data, but the bigger picture is the better picture in my book. Least risky, the more accurate. So there you go for the weekly. Let me get a sip of water before I turn to dust. All right, so now let's go down to a little bit less of a time frame. So we're looking at the 3-day. This will be key, right? This is our 200. When we broke that, that was very significant. And a lot of people overlook that being the biggest indication of more downside is coming. Anytime we've ever broken that in history, it's not been good, right? There was the last time, right? And as soon as we broke it, we fell immediately. As soon as we broke it, we fell pretty much immediately, right? So there's your data points on that. Again, right back there. Look at even 2014, right? A lot of rhyming, not exactly mirroring, but a lot of rhyming. Break the 200 and down. 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 You catching a pattern there? Okay, so when we have a rally back to the upside, maybe that would be a good spot for resistance. So that would roughly be around 40 to 41K. When we get there, if we get there in the next handful of months, you can see that could take some time, right? So again, this is the BLX, not Bitcoin. So let's go back to Bitcoin so we get at least the current prices. So we're having a decent rally today, up almost 6%. A lot of altcoins recovering a little bit sharper than that even. So when we move up, there you go. There's our current price. And what we want to start doing, flipping our moving averages, holding them support. So the first obstacle on the 3-day is going to be the 8 EMA, which is currently just north of 32K. Okay, so let's go down to the daily and look at that. So my point on that 3-day is this is the most significant thing you could be watching on the 3-day chart. That's going to be huge when we get to it. We got to flip that back as support, and once we do, there's a good chance that Bitcoin's gaining a lot of strength if that happens. Now, The last time we did that was kind of the pandemic, and we kind of just flew right through it. Before that, the huge recovery from 2018, 2019. And, initially that first candle, we got above it and closed right below it. And the very next week, we launched up, retouched back on the 8. And then, that's when you start to get really bullish, when you start holding the 8 EMA on any chart, the daily, the hourly, the weekly. If you're holding the 8, that's much more bullish than not. So use that. Okay, so that's the 3-day point across. Okay, got it. So the daily, since the last time we talked, when was the last time we talked? I don't even know what the date is. It was somewhere in here. Monday. What we're doing now? Well, look, we're still holding. Remember way back the whole 9 seconds ago when I said the EMA 8. So until we can flip that and hold it as support, right? We're going to continue to hold it as resistance, which is done, right? There's nothing shocking about this yet, right? Until we close 2 daily candles above the EMA 8, it's going to hold as resistance. So if you're into shorting, I mean, these are good opportunities. And you're like, well, what if we go higher? Well, you have your stop loss just right up here, but on these previous two days, right? If you put your stop loss right here and we blast through like 31K, put it just above 31K. If you go through that, you risk what? You're risking like 1 or 2% to potentially, make a lot more to the downside, right? You don't have to lose money when the price goes down. There's, if we go back to 27K or something, that's 10% to your favor, right? So we're right, and this is kind of what you do. You short into resistance, you buy into support. That's how pro traders do it for the past 50 years, 100 years, whatever. Whenever they've been clicking and filling out charts or writing pencils, and I don't know where I'm going with that, but you get it. So closing 2 daily candles above the EMA 8 would likely signify more strength is coming back to Bitcoin. Until that happens, there's no proof against that Bitcoin's doing anything other than just rinse and repeat, right? Up, right back down, up, right back down, up, until we close today, right? And where would that be? Well, if we close at 30,005, that would be 1, right? We did that right here. We need to do 2. We need to do 2. I can't stress how important that would be. So if we close 1, then tomorrow would be very significant. If we can close 2, you can see it's been a while since we've had any dual candles closing above, right? There's the last time, and even that was looking pretty suspect, right? So look at all the tight all the moving averages were. Now notice how different. So if we start doing that, then you want to be looking at your next target is the moving average right above you. So 32.8 right now. If we close, and that's only if we close 2 daily candles, right? We potentially could come up here today or tomorrow. Bitcoin wants to get really, testy. Watch your moving average that's above. If you're passing one, look at the other. If we pass this one, you want to look at your 50. There's your 50, right? This is how you do it. Then if you want a more concrete evidence and more confluence, look left. Look for your last support line that was broken, or the last support zone even, right? So you could even look at something like that. So 37K right in there. That's gonna play a role when we get back up to it. So just, you can extend that out, right? This is going to be an issue when we get back up here. More likely than not, when you're holding it for months at a time and then you break it, it's probably going to flip back to the opposite of what it was. So previous support will flip to resistance more likely than not when we get there. So now you get the big picture. The daily, the weekly, the 3-day, you got some moving averages. So you want to be a student as much as possible in these times, and not necessarily just, being the shadow puppet and watching what everybody else is talking about. These are the times to improve your training regime and become a better trader, so you can rely less on what other people are saying. You should be using YouTube videos to confirming your thesis rather than making your thesis, right? So that's why I'm here. I'm here to help you become a better trader. I'm showing you ways to do that. So you want to look at levels, moving averages, right? Previous moves, previous breaks. What did that do? You should learn from history, but don't depend on it. Okay. So yeah, that'll be it for this update, I think. Let me know if you want to do some altcoins maybe in the next video. You know, I got some like kind of different zones we talked about in our Telegram group. Let's see if I got some of those up here like this, like I got green, yellow, and red. So if you want, you know, some stuff like that, I do some stuff like that in Telegram. We do daily updates in the kind of the Patreon level. So maybe it's worth it to you, maybe it's not yet. You know, if you want to, you know, build your portfolio back up a little bit first, you know, I get it. But if you want to learn more and invest in your future, that's kind of why I'm here. So a lot of more info than what you see here on YouTube on there. So I appreciate you sticking around this long if you have. Thumbs up if you haven't already. Remember to do that. Quote of the day: courage is fire and bullying is smoke. All right, I'll go with it. I don't make them up. I just read them to you. All right, car of the day: Aston Martin Vantage. Probably one of the best looking cars for the money, in my opinion. So you can get one of these brand new for like 120, 125. I think it's pretty good for Aston Martin. It's a kind of supercar, right? So I know it's still expensive, but you know what I'm saying, right? All right, that's the Aston Martin Vantage. I actually love this car. I got the model right there. Same color. Shocking. Shocking yellow, right? All right, I'll just stop the rambling there. Hopefully that helped you today. Let me know what you learned, what you liked, what you hopefully you didn't like a whole lot, right? I mean, I didn't ask you to do anything but hit a like button. All right, I'll see you on the next video. Thursday update for Bitcoin. We'll see what comes of Monday. I'll see you then.